Welcome to another edition of the Exploring Mining podcast. Today, my conversation is with Jay Martin. Jay Martin is an investor and the CEO of Cambridge House, an upcoming resource conference, the Vancouver Resource Investment Conference. The Vancouver Resource Investment Conference is held January 19th and 20th in Vancouver, BC. With 120 keynote speakers, 300 mining companies, and 9,000 attending investors, we discuss why this year is a must attend. Some of the topics covered are geopolitical relationships are being redefined, emerging markets are about to boom, AI and energy revolution are here, and the demand for commodities is set to explode as artificial intelligence and new energy solutions reshape the industry. To learn more, click the links below. For investors that are new to investing in the commodities space, Jay offers the commodityuniversity.com, which you can click on the link below. Unlock the door to your next wealth building opportunity and become an expert in investing in commodities. As a reminder to investors, please read all disclaimers and disclosures and do your own due diligence. Jay, thanks so much for joining the show. VRIC is about a month away now, which is really exciting. Can you talk to us a little bit about the theme for 2025 VRIC and what's on some of the panels?
Yeah, 100%, Cali, and thanks for having me on. I'm super excited about this year's event and crazy that we're 5 weeks out. You know, the way we framed this year's agenda was with a three-tiered content system, meaning we start this year going very high level with lots of geopolitics. And the reason that we're covering geopolitics way more extensively than any other year prior is just because there's way more going on that matters this year, right? There's hot conflicts happening in every region that are constricting the supply of the commodities that we invest in, and that's impacting the price. So geopolitics matters more today than ever. The second tier down, we cover macro in a big way because monetary policy, fiscal policy directly impacts the price of the same raw materials and is influenced by geopolitics. And so we kind of start at the top with the global outlook. Then we get into primarily US, but global macro policy and monetary and financial policy. And the third tier is like direct capital allocation in the mining business. So once we understand the direction the world is heading, the direction monetary policy is heading, then we get into capital allocation into the miners themselves. And you'll see dozens of speakers on our stage this year who are telling you exactly where they're putting their cash to work in 2025. We're flying in over 80 keynote speakers this year, and everybody is vetted based on their successful track record of either forecasting trends or allocating cash in the commodity business.
I just did an interview with Peter Kraut and Jeff Clark, so that I know they're two of the speakers that are coming to VRIC. Can you name some of the other ones that maybe are noteworthy that investors should definitely pay attention to and show up for those panels?
100%. Yeah. So back to our three tiers. I mean, on the geopolitical front, we're flying in Colonel Douglas McGregor, who's an absolute powerhouse in terms of pulling apart the threads of the international conflicts that we're watching and really identifying who the true stakeholders are and what their key incentives are in these conflicts. And another would be Dr. Pippa Malmgren, who I've tried to get to my conference for years. I mean, she's an amazing geopolitical analyst. She was a direct report to George W. Bush when he was in the White House, and she led the innovation defense strategy. So that means, identifying the biggest technological threats to the United States and then addressing policy that would respond to those. And so those two are leading my geopolitical subject matter. Then in the monetary macro front, we've got individuals like David Rosenberg, Danielle DiMartino Booth, Grant Williams, Brent Johnson, Robert Kiyosaki, a lot of names who, full-time job is reading macro trends and investing in big picture ideas. And when you get into the more base level capital allocation in the commodity business, you'll see individuals like Rick Rule, Frank Giustra, Ross Beatty, Jeff Clark, Peter Kraut, Danielle Park, one of my absolute favorites in terms of just a very conservative but pragmatic approach to reading markets. I really enjoy her. And all in, there's about 85 speakers this year. And we build a variety of panels, fireside chats, debates. It's 2 days just jammed packed. And my intention is that everybody who shows up at this event leaves armed with like 10 good ideas they can then action for their portfolio in 2025.
That is an impressive lineup. So I've probably been reading your Sunday newsletter, I feel like, for a very long time, and I love it. I love the stories and how it relates again back into the commodities and mining sector. So for some of the investors that might be newer to the commodity space, because I feel like, with inflation, geopoliticals, there's a lot of investors that maybe have overlooked the junior mining space and now are interested in seeing what it's all about. Can you just talk to us about how VRIC has evolved over, how many years have you been running it? And then how many years was it before that it's been going?
Yeah, I've been running VRIC for 15 years, and the conference has been around for almost twice that long. And it's taken a few forms during that time, so it wasn't always VRIC, but a very long time. Now, like in the last 15 years, it's quite the span. But what I would say is that we've seen massive underinvestment. To your point, like mining equities have been fairly unloved for a while. And as a consequence, the sector's been very underinvested. And that means producers have been starved of capital. And that means less supply is coming to market. But, obviously we know the direction of human ingenuity and progress has always only gone one direction, and that's up and to the right. We grow, we move forward, we build, we innovate. And copper is like the best example of this. We can talk about speculative copper demand in the future on the heels of AI or EVs or renewable energy, and maybe those things will create massive anomalies and surge demand. They might not. I'm not quite sure. I don't forecast the future. And also, we could hit a globally coordinated recession that would actually crush demand. That could also occur. Again, I don't know. I don't forecast the future, but what we can do, and this is why I like copper so much, is look at the last 50 years. Because during the last 50 years, we saw massive technological disruption to the upside. We saw a few globally coordinated recessions. We've seen all the things that might happen in the future happen in the last 50 years. And despite those things happening, you look at the decade over decade demand for copper, and it's very consistent. We add about 3 to 4 million metric tons per decade without fail. Through the 70s inflation crisis, through 87 crash, dot-com bust, through the dawn of the internet and smart tech and smartphones. Like we've seen it go both ways, but over the last 50 years, despite that, it's been a constant addition of 3 to 4 million metric tons per year, every decade per decade since the 70s, And what's interesting about that is that during those same decades, you'll see production like right in step, 3 to 4 million metric tons in 1970 in demand and produced. Same thing in 1980, 7 to 8 million metric tons in demand, 7 to 8 million metric tons produced. And that is like remarkably consistent until about 2012. Like up until 2010, it's like right in step. And then you see demand continue on the trajectory that humans grow at. But suddenly we start to see this gap begin to widen because we haven't been investing in new supply. And that really gets accented in 2015, and then 2020, it begins to run away. And production's stayed around 19, 20 million metric tons since 2010, although demand has continued to step up. And now we're at about 24, 25 million metric tons. So that gap will continue. And that's like directly to your comment about like miners being unloved, capital not going that direction, but humans are still growing. The demand's not going anywhere, right? Supply has been stagnant, which is a massive opportunity for individuals like you and I and being a contrarian investor and running into a sector that's unloved is easier said than done. Like it's hard to be a contrarian. I get it. If you can have a thesis and say, I think this is a good place to put capital because the mining sector looks very undervalued relative to demand, relative to equities and all of this. Actually running into that is challenging, and it really will test your mettle. But that's where fortunes are made, is when you're first into a massively undervalued cyclical market that eventually will turn. You can't time it. It's very hard. But cyclical markets have massive troughs and massive peaks. And I think we're coming out of a big trough that began in like 2022 and into the next stage of what I firmly believe is a commodity super cycle.
Again, talking about the younger generation, we're running out of geologists, we're running out of the younger investors, again, in the junior mining space. For us, it's different. Like you had parents in the market, I had parents in the market. So, you heard those mining stories all your life, and so it's built into our DNA to jump in. Um, and what I love about VRIC is the stories, because you can go down there. I know I did when I was 22 and had no idea what I was talking about or half of the mining market, but everyone's friendly. Everyone will tell you a story. What are some of the stories that got you into mining and into the market?
Yeah, my first and forever love is geopolitics. So there's a bias in this year's agenda. I'm covering it so extensively because I love it. And I think as a commodity investor, you need to pay attention to the global alliances that are being formed because that dictates trade and therefore that dictates the supply of raw materials. And my entire life has been the era of globalization, meaning at a global level, more countries have shared the stuff they have, right? More free trade. And that leads to a lifetime of increased access to cheaper and wider variety of goods, right? That's what globalization has done to a large degree. But that era is over now. Like that is very clear. What happens next? Not so clear. Not quite certain how the cards will shake out. But the globalization trend is done. We are deglobalizing, and how that shakes out will be determined. There's a lot of really interesting theories, friendshoring, reshoring, but without question, new adversaries are being formed and new alliances are being made. And the way we share resources will forever be changed. And that, whenever the supply of something becomes less certain, you're willing to pay more for it to secure that supply. And that's why we're seeing all sorts of commodities, both hard and soft, hit all-time highs because we're just not sure where we're going to get them from. And new, countries like Indonesia, suddenly a massive player, right? That was kind of a backyard conversation from a commodity standpoint for a while because they exported nickel. We bought their nickel. That's what it was, right? They're the world's largest nickel exporter. And now they realize it's time to play the ace up their sleeve. And so they're being very coy about who they're going to partner with from a trade standpoint moving forward. And that is massively impactful. You can't build anything that conducts electricity without nickel. And so countries like Indonesia are recognizing that it's their time to play their card, and they're doing so, And so the reason I love geopolitics is because you can look through any era of history. I mean, pick today, pick 100 years ago or 500 years ago. It doesn't matter. We've always fought over the stuff in the ground. Now, it's not a pretty story. I don't love that we do that, but we always have and always will. And if you really dig into the roots of the conflicts that we're seeing today or at any stage, it always comes down to that. It's like, who's got control of the stuff in the ground and who wants that stuff, right? And it can be the oil wars of recent, the banana wars of the early 19th century, crazy stories that isn't that covered, but fascinating. We went to war for bananas, believe it or not. So people ask me, would we go to war for copper? It's like, well, I mean, I hope not, but we've gone to war for sillier things. We've gone to war for nutmeg and tobacco, buffalo territory, like you name it, right? We fought over this stuff and we always will. So geopolitics is like a real life Game of Thrones. There's no better fiction available than the one happening, than the nonfiction happening right in front of our eyes today. And it's fascinating, and it does impact your life to a very large degree, just in terms of general affordability or opportunity in the country that you live in. So, geopolitics today is like it was my first like passion, 15 years ago, and still is today, and it's really helped me as a commodity investor in a very big way.
So for investors that are coming down to VRIC, what are your suggestions for them for the day? Be there first thing and then break it down, like you said, from geopolitical and then down to the macros, and then start watching the juniors. And what do you think is their best avenue to divide and conquer for the day?
Yeah, really good question. It's really comes down to who you are as an investor. It's a packed 2 days. We have 5 stages that will stream content for 2 days straight. So you do have to triage a little bit. Have a look at the agenda in advance. Choose your adventure. If you're very curious about the silver sector, go see individuals like Jeff Clark, like Peter Kraut, like Lynette Zhang, Ross Beatty, one of the most successful silver entrepreneurs in the world. If you're trending towards, gold or copper, go that direction. We've got deep dives on all of it. So in our main hall, you'll see the 2025 gold forecast, copper forecast, uranium forecast, silver forecast. We go very deep into the core commodities. So plan in advance, but also depending on how much experience you have in this sector, like just a little plug here. We built a 10 chapter video course for anybody who's new to investing in the commodity sector. It's called the Commodity University, and it's at thecommodityuniversity.com. If you're brand new, start there, because over the last 2 years, we noticed that more and more new investors were showing up at our conference. And I was so excited to see them. Last year, 30% of our attendees were there for the first time ever. And the most common question I got was, where do I start? How do I get started? Right? And there's like 100 answers to that question. And they all could be right, depending on your experience, your available capital, your risk tolerance, your time horizon. And so we built a course to answer that question. It is the absolute fundamentals to get you started investing in the commodity sector. If you complete this course, you'll be able to walk around my show or any of my peer conferences and have intelligent conversations about copper, silver, gold, and what the economic indicators are that move those prices, how to begin valuing companies that produce those things or are exploring for those things. And so it all starts with education, right? So I might point you there, but if you're coming to the event, like, yeah, get there early. For sure, hit the speaker hall first thing in the morning. We open up with really big subject matter, and then I run the workshops, the other 4 stages all day long, where you can get really granular with the stock pickers and the capital allocators and the money managers. But it's a ton of fun. It's busy. It's very busy. So plan ahead.
Oh, I love that. I feel like I could have used that book probably 15 years ago when I started.
Yeah, me too. That's why. Totally agree. Totally agree.
I was going to ask you some rapid fire questions because I know you're short on time. I was going to say favorite book, besides the one that you wrote for new investors. What's your favorite book right now?
Favorite book. I mean, so some classics would be Anti-Fragile, Nassim Taleb. Definitely the one I gift. I'm reading a book right now called Morality, and I'm failing on the name. It's by a pastor who wrote this in like 2019, and he's sort of attacking the concept of individualism and how this is causing a lot of fracture lines in our culture. It's manifesting in all kinds of weird phenomenons. We can get into that. That's a whole nother thing. But yeah, fascinating book. It's called Morality. I can't recall the author, but every year, Cali, like I'll read a bunch of books. You probably do the same. There's always like one or two that really stand out, and I'll buy 10 copies of that book, and then I just gift the heck out of it, right? And Morality is that book this year. I'm gifting a lot of that one. I think it's very thought provoking and impacted my life in a big way, in how my family is reorganizing our direct community in some fun ways. So, but Anti-Fragile, definitely a big win. What do I got behind me here? Strategy of Denial, Elbridge Colby. So this is a fantastic book. Elbridge was the Deputy Secretary of Defense during Trump's first term, and he wrote the National Defense Strategy for the White House in 2018. And he makes a great case for why, no matter which conflict you're looking at around the world, whether it's the Middle East, whether it's Europe, whether it's what's at the core of this are just proxy wars. And there's the US and China funding and supplying proxy wars all over the world. When you get deep enough, you'll find the same two power players fighting for territory. And writes a very compelling case. I don't agree with all of his statements. He's more maybe a bit more hawkish than I would be, but I really appreciate his perspective, and fascinating gentleman.
So what is your favorite commodity going into 2025 if you had to pick one?
Well, two answers, right? From an investment standpoint, I'm absolutely most bullish on junior gold producers right now. I mean, most bullish. That's where I'm putting my money right now. So, in terms of like, where do I have skin in the game, and where am I exposing myself? It's right there. Very bullish on the gold sector. I definitely have some exposure to developers and explorers. I like going very early stage. Not everybody should. By the way, it's very risky to go early stage mineral exploration, but I live in this industry. I'm definitely competitive in that arena, so I'm comfortable going very early stage. But junior gold producers would be probably my biggest exposure right now. And then just because I'm here, like I live in this business, I do love the copper story. I just love following the copper sector for some of the reasons we discussed. It's just such a critical, strategic, and as bullish as people are on copper today, I still think a very misunderstood metal.
And what's your best piece of free advice you've ever received in the market?
Oh man, the best piece of free advice. It would be the barbell portfolio strategy. And so I still use this today. And what that means is that really simple. I have my cash and my net worth allocated to two very different buckets in terms of risk exposure. One is very boring and lacks volatility by design, therefore upside as well, but it preserves purchasing power. And this for me is like cash equivalents, lots of gold, and real estate. And that's the vast majority of my net worth is in boring things. And then I'm way over on the other side of the risk spectrum in, yes, junior gold producers, developers, explorers in the mineral exploration business. I have nothing in the middle. And that's because when I look at sort of middle road investment opportunities, general equities, I don't have a competitive advantage there. I don't know anything that the general public, it's hard for me to be ahead of the herd in the most densely populated bets in the market. So I like going to the less populated areas and doing an extraordinary amount of research and building a competitive advantage and then going hard into something with asymmetric upside. But I only do that because the majority of my net worth is in rock solid things that don't change much no matter what happens. And the benefit, I think you have to learn this lesson the hard way. Typically when investors begin their career, they go too big into too risky of an idea. And sometimes they get lucky and they think they're really smart. Then they go bigger and they lose it all eventually, right? It almost always happens where you have to get wiped out, hopefully early when you don't have much to lose and you don't have any dependents and all this stuff. But eventually you figure out, you look at the legends in the market, whether in our industry, individuals like Rick Rule, like Frank Giustra, or in general equity markets, what they all have in common is duration. They stayed at the table in good markets and bad. They never bet more than they could afford to lose. They always kept that stable side of the barbell buffed out to a point of like mind-numbing, boring, and patient required mindset, right? Because you want to go into the exciting stuff. You want to participate in the upside when it's available. And this side of the barbell, the boring side, isn't, there's no upside there. It's boring, but that's what keeps you in the game. It keeps you at the table and allows you to keep coming back, right? And it doesn't matter where you look. Look at a guy like Warren Buffett, right? He's the Oracle of Omaha because he's been an investor for over 80 years. Like that's his strategy has been brilliant. But the main reason is because he's been an investor for over 80 years. Had he started when he was 30 and quit when he was 65, he still would have made a bunch of money, but none of us would ever have heard his name, right? It was duration that let him acquire a $300 billion current treasury portfolio. I mean, the guy owns 4% of the treasury market today. And interesting to watch him because this is the first time, this is the perpetual American bull. And suddenly he's not in the market or he's divesting aggressively from Apple and American banks and all this stuff. And, two ways to think about that. Number one, he sees the overvaluation of equities like a lot of us see and just doesn't want to take part in that. But also $300 billion in cash equivalents. If he's generating a 5% yield, that's $15 billion in new money every single year. It's hard to find a better idea than that. But I'd be interested to see what he does next as rates start to come down and that opportunity begins to dry up, where that money's going to go next. Like that'll be a very interesting thing to pay attention to. But across the board, it's always duration that wins, whether it's Rick Rule. He's been in the game for 50 years now as a resource investor. And most people don't last that long. They get wiped out. They get too aggressive. They're not conservative when they should be. And they get cleaned out when the market's correct. If you can stay at the table, continue to pull forward your lessons, reapply, that's what wins. And so make sure whatever your strategy looks like, you're good. The other benefit to having that like buffed out side of the stable barbell is that when things hit the fan, like whether frantic rallying to the upside or terrifying crashes to the downside, well, everybody else is panic buying and panic selling. You can afford to do nothing because your net worth is protected in boring asset classes, right? That allows you to step back, watch everybody else freak out, wait until things are a bit clear, and then make an aggressive move and strike, when everyone else is running away. But you can only do that if you have like calm peace of mind, and you're not calm with peace of mind if you're too invested in volatile assets. So, that was actually a lesson from Nassim Taleb that was doubled down by one of my early mentors, Rick Rule, in this business. And the barbell strategy, I still swear by that today.
I love that. And what was your first deal that you ever your big win?
It's not a deal that you'd think. It was in 16? I flew a bunch of investors out to Toronto to look at a bunch of private deals that I was building an investment club. We still run it today. It's called the Pangea Club. And this was the first meeting of the Pangea Club. I had 8 investors with me, and we flew out to Toronto. I organized eight deals to come pitch us. So I had a boardroom booked at Canaccord Genuity, and 8 entrepreneurs showed up and gave us a pitch. It was 2017, maybe 2018. So this was like first blockchain mania. If you remember 2018, it was like the first sort of mainstream, Bitcoin rush and blockchain rush. So everybody was that's all anybody wanted to see. And we looked at a couple commodity deals, a couple blockchain deals, and then this entrepreneur got up and pitched us on a plant-based infant formula. So way out of left field, right? But she was one of those entrepreneurs when you meet her and you're like, I don't care what you do, like you're a pit bull and I want to bet on you. It just happens to be that you're an infant formula. They're, entrepreneurs based in Tel Aviv, and her market was throughout Europe. And she had this patent on an almond and buckwheat based infant formula called Else Nutrition. And we financed her privately. She ended up going public. Massive win, several 100% return on that. And she delivered, got her product on the shelves and built an amazing company. So wasn't a commodity deal. It was a baby food company, but sometimes that's what happens.
I love that. It was very unexpected. Final question. What are 3 words you want people to think about or come out with at the end of VRIC?
I'm inclined to say patience, patience, patience. It's the the number one reason we see investors get in trouble is because they lack patience. Sometimes patience is the best trade. It's the most frustrating one, to sit back and wait, but it's often what serves you best. And I've seen a lot of investors make a lot of money and give it all back because they were always in a rush. I've seen investors chase share prices and get hung out to dry because they're always in a rush. Sell during a slight correction, even when they still have high conviction in and the fundamentals are solid, but some volatility drops share price, and they get out before they should because they're in a rush to make money. Patience is what wins as an investor. No matter what market you're in, I don't care if you're in crypto, it's not a get rich quick scheme. It isn't. Markets are a go broke fast scheme if you play it that way, but they can be a get rich slow scheme. If you have patience, you take your time, you get educated, and you move smartly.
Well, that does it for today's Exploring Mining podcast. If you'd like to be a guest or sponsor for this podcast, please contact investorideas.com. InvestorIdeas.com reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. All investment involves risk, and this podcast is not meant to be an endorsement to buy or sell securities or products. To hear more podcasts, you can go to InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on iTunes, Spotify, Google Play Music, iHeart.com, TuneIn, Stitcher, Spreaker, and SoundCloud.